One of the biggest and most frequently asked questions that we get on our channel or on our social media is how do you use policy loans? Like, what's the actual process? How fast does it go? How does it work? What should I use them for? In today's video, that's what we're going to find out. Now, this video was sent to me by another individual. We'll call him out and his website that he represents here in the video just shortly. But what I want to do is watch him walk through the policy loan process. And I'm going to give my knee-jerk reactions to that process. I'm going to walk you through exactly what he's doing so I can answer your most frequently asked questions about policy loans. Let's jump into it and let's give this a watch.
We've covered all of that. Let's jump into how this policy and how these loans are going to work for you using your dividend paying whole life infinite banking policy. All right, so we're going to go to view my policy, and that hopefully pops up with some pretty quick information here. Yes, it does. So I pay $30,000 a year into my policy. I actually pay a little bit more, about $32,640 a year into my policy. Max that thing out. Some of you may think that's a lot. I think that's a good number because this is money that I have access to, again, for these exact things, which I'm going to show you, which is paying off debt.
Okay, so I want to stop the video here and I want to talk to you for just a second about his premium deposit. Now, you heard him say it. He puts $30,000 or just above $30,000 into his policy each and every year. Now, a lot of you are thinking, oh my goodness, that is the most expensive insurance policy that I've ever even heard of. And if we were only talking about insurance, any type, car, or phone, or life insurance, I'd agree with you. It is the most expensive policy I've ever heard. But when you're talking about infinite banking, see, infinite banking is using the product of a whole life policy for your individual banking needs, for your financing needs. You've got to think of the policy premium, the cost coming out of your pocket and paying for that policy, more like a deposit than you need to think of it like an insurance premium. Now, if you think of this like a deposit, what you'd realize is that you deposit a lot more money than $30,000 into your everyday conventional bank accounts at your local bank right now. Every single time you get paid, that money hits the bank. It all goes into someone else's bank. This gentleman's trying to use his infinite banking policy as his own personal bank. And so that's why his premium is the size that it is. Not only that, you've got to understand also that you get to pick the premiums. So this is not the insurance company saying you have to pay that much. This gentleman decided that he wanted to pay that much. There's a big difference. Let's keep watching.
So I'm going to come on over here to the values tab on my page, and I'm going to head down to loans. I have $19,826.11 available for loans. I have some credit cards I'm going to pay off because my wife and I use those to accumulate points on a monthly basis. Then we pay them off. I also have some student debt. Thank you, that I've been kind of kicking the can down the road on paying off, so I'm going to pay a large portion of that off as well. Sweet certificate back there for graduating from Arizona State University, and yeah, not using my degree, so thank you so much for that.
Okay, I'm going to stop it one more time because I want to talk to you about loans. This is another commonly, frequently asked question that we get all the time. People say, hold on a second, he put $30,000 of his own money into this policy, but he could only take out $19,000 as a loan. What in the world happened to the other $11,000? And if you're asking that question of yourself at home, I've got to tell you, you've missed it. You've actually missed it in what was said and what's happening inside the policy. Here's how I like to break it down. Let's say that this gentleman decided to put $30,000 into his Wells Fargo, Bank of America, JP Morgan Chase bank account. And he comes back the next day and he drives up to the window, goes inside the bank, goes to the ATM, and he withdraws $19,000. See, with a withdrawal, all you've got left is $11,000. You knew that. But if he deposits $30,000 into that bank account and the next day comes back inside the bank and takes a loan of $19,000 from the bank, there has not been a deduction in his balance. He took the bank's money, right? Or in this case, he's taking the insurance company's money, not a direct deduction from what he put in. It's not a withdrawal, it's a loan. Let's keep watching.
We'll go, how would you like to receive your funds? Mail it to me? No. Go ahead and drop that in my bank account 2 to 3 business days at most. How much of this would you like to receive? I want all of it. Give me all of it right now because I got some debts I want to pay off, you know? It's my money. I need it now. You know what that's from? Shout out to you. Let's see. Yes, this would be no, and no. Let's go ahead and not withhold state income tax because, again, these are loans. Loans are not taxed in the U.S., so I'm getting money loaned to me from the insurance company. I'm not using my own money. They are loaning me a portion of their money to pay off these loans. So,
Okay, let me stop it one more time here. This is really, really important. He mentioned taxes for just a second. In a properly designed dividend-paying whole life insurance policy, you don't have to worry about taxes. You don't have to worry about IRS. You don't have to worry about Uncle Sam. There are no income taxes. Now, these companies that here we are using for these infinite banking policies do offer other types of insurance. And sometimes in other types of insurance, you can incur taxes. Not with infinite banking, but in the other types. So a lot of times they ask you about taxes when you're pulling out loans. In infinite banking policies, you can check that no box every single time because you don't have to worry about taxes. Reminder, this is a loan from the insurance company. Just in case you were interested or didn't realize where the loan money comes from, what I actually want to do is back us up just a second to a screen that he had on earlier in the video, because what this screen is going to show you is exactly how much death benefit or money that's coming to his family when he passes away. Not if, but when he passes away. This is whole life insurance. It's right there on the screen. It's $980,000 if you can see it. Okay, so why that's important to you is because he is loaning from the future payoff of the death benefit. The reason the insurance company is going to allow him to have a loan in the first place is because that loan money is coming from the future payoff, right? That's where the money's collateralized, not from what he put in, not from anything that he's contributed, but from the insurance company as a whole. Okay, you guys ready? Let's keep moving.
We'll go ahead and head forward. No, not at this time. I will set up a repayment plan when I am ready because I am in complete control of my policy. So I pay back when and what I want to pay back.
I got to stop it here again. Did you guys see that screen? And so far in the video, if you don't catch anything, I think this is the most important thing that you can catch. Exactly what he said and exactly what the screen showed just a moment ago. On the screen, it is asking you when you take the loan if you want to set up a loan request. Now, I don't know about you, but over at Bank of America, at Wells Fargo, at JP Morgan Chase, at your local credit union, I don't know where else you like to put your money. But if you go in there and you ask them for a loan, there is no chance in the world that they'd ask you if you wanted to repay it. See, here inside of dividend-paying whole life insurance policies, loan repayments are completely up to you. These are unstructured loans. Reminder of where the loan money is coming from. This money is coming from the insurance company, collateralized in your death benefit. You don't have to repay it. Now, a lot of times we are going to teach you to repay it because of what happens when you do. We want your policy to grow, but you don't have to. And that's really important. Really, really, really important. Let's keep moving.
I am in complete control of my policy. So I pay back when and what I want to pay back. Scroll down through this information right here. I agree. Go ahead and, oh, there you go. Crazy noises. Thank you for completing your loan request. They're going to drop this into my account in the next 2 to 3 business days. Once I get this money, I will be back on to walk you guys through the process of paying off these loans with the money in my actual account.
We've got to give it a stop. We need to summarize just a little bit about halfway through this gentleman's video, exactly what's happened so far. The first thing that he said, he talked about premium. Again, remember, you get to choose your own premium. How much money goes into your policy is completely up to you. But you've got to think about your policy like a deposit into a bank. We're starting an infinite banking policy, not just an insurance policy. That's why this gentleman's deposit was 5 digits, $30,000 plus. I've helped people do things similar. I've helped people do things smaller. I've helped people do things bigger. If you're interested in getting started, you get to determine your own premium, and that's important. The second thing he talked about is loans. Reminder that loans are not and will never directly subtract from the balance that you have sitting at that institution. That's a withdrawal, not a loan. From infinite banking policies, you take loans. Those are collateralized in the death benefit. And so what happens is you get those loans private and unstructured. That is a really, really, really big deal. You don't have to worry about taxes. And of course, you get to determine and decide if and when you want to do the loan repayment. That is humongous. Now, what does he want to do with his loan that he gets in his bank account? Let's keep watching and find out.
Over to the dashboard of Nelnet. Yeah, whatever. It's federal student aid. So this is where my lovely student loan lives that I've been paying really just the minimum $263.94 on. But I'm going to go ahead and make a payment. You could see I owe $24,059.13, which it seems impossible to get it under $24,000. And it looks like I have a payment due tomorrow. So let's go ahead and go make a payment. And we are going to say other amount, $13,000 towards that lovely student loan. Now, I would be really sad if I was using my own cash right here, because that $13,000 would be gone and I would never see it again. I would never earn interest on that money again. That money would be gone forever. Thank God I'm spending other people's money and not my money. So I'm still going to be earning interest off of all of this money, because it still sits in my infinite banking policy.
It's time for me to pause. How powerful is that, right? When you take a loan from the insurance company, there has not been a direct subtraction, deduction, or withdrawal from the premiums that you've put in. What that means is the guaranteed values, the interest earned, or the dividends, if you're using mutual companies, which we always do, are completely guaranteed to you still on the full amount of premium that you've ever deposited into the policy. So you've got to imagine with me, you've gotten started with an infinite banking policy, maybe just like this gentleman at $30,000 a year. And it's been 1 year and 2 years and 3 years. The full sum of that money, $30,000, $60,000, $90,000, $120,000 is still inside your policy. Now, you've been spending and using money the entire time, all throughout all these years, but it was always loan money, OPM, other people's money. It was always the insurance company's money you were spending and never your own. That's exactly what's happening and what he's saying here. He's willing to pay off those student loans, those pesky student loans, because he's using someone else's money to do it. How awesome. Let's keep watching.
I'll pay the rest here in probably next month with another loan payment, but we're going to go ahead and go continue. Nope, I do not want to put it in that bank. I want to go from a different account. So I'm going to pause this, punch my account information in, because I don't want you guys to have my account information, and then you'll go ahead and see me pay this thing.
Okay, let's stop. Did you guys catch what he said? He said he's not only paying off a bunch of the student loan now, but he's more than likely to pay off the remainder of the student loan with another loan from the insurance company next month. Now, I don't know about you, but a lot of people go to school. It's back to school season around here, right? A lot of people go to school, and a lot of people spend a lot of money to do so. There's federal loans, there's grants, there's scholarships, there's money from parents, there's gifts, there's all sorts of things to go get a good education. And what happens for most people is these student loan payments linger forever. Right? You're 30 years old or 40 years old and you're still paying and have been paying for a long time out of school. And if you really thought about it, you probably don't want to spend your own hard-earned income to pay off the student loan. You're probably making the minimum payments over and over and over again. What he's saying is he's finally got an opportunity to eliminate the student loans from his life. And the reason that he's doing it is because he's using other people's money. Not only that, but his policy is going to generate enough cash value, enough loan money again next month that he can completely eliminate the student loans. Now, again, I don't know this gentleman's situation specifically. I don't know if he's got more than one infinite banking policy. That's where he's pulling the money from, or if just this policy he's going to pay back. I don't know all that. But what I do know is that next month when he pays this off, he's probably going to be pretty happy. Let's keep watching.
So I went ahead and punched that information in. Here we go. You can see payment amount, $13,000 right here. Payment due date, 8/22/2024. Capital One account. I am going to go ahead and check that box. 3, 2, 1, I'm paying this bad boy. And that's how you use your infinite banking policy to pay off loans.
I love it. And there you have it. That is exactly how you can use your infinite banking policy, just like this gentleman did, to take that loan from the insurance company using OPM while you're still earning on all of the money that you've deposited. It's what we at the Cash Compound like to call our save and spend system, because we're saving our money while we're spending someone else's. And this guy, just like you, used it to pay down or pay off those bills, those debts, those third-party debts, especially that pesky student loan. If this is your first time hearing about infinite banking, or you want to do something that's very similar to what this gentleman did, what you should do is give us a call. There's a link in the description of the video, or you can visit our website where you're going to find links everywhere, because we want to talk to you. Our consultations are completely free, and we can walk you through an example that is very similar to this, just insert your situation. What we want to do is walk you through it so you understand how infinite banking can work for you and how you can use loans to eliminate debt. We'll see you next time.
You are now tuned to the banking bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.